All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about FuboTV, stock ticker FUBO. They are a streaming service. They replace cable. We've done videos on Fubo before, and in that video, I expressed some concerns. So I want to give an update to where I'm at with Fubo right now. We cover these types of small cap, high growth stocks on the channel all the time. If that's content that you're interested in, or if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody would please smash the like button, that helps out the channel a lot. Okay, let's look at Fubo TV. So right now we're in the middle of the day trading on July 7th, and Fubo is trading for about $2.69. It's up about 7% on the day today. So the market is up today and it's having a decent day, but we're going to look at the charts later. Fubo is still very near its all-time low. So we're going to talk about our concerns, and then I'm going to talk about some price target, and we'll look at the charts. Okay, the first thing I want to show you is right now they have a market cap of about $500 million. So if we go back and look at this chart of Fubo's market cap over the last few years, you'll see that in February of 2021, so that was well over a year ago now, this was a $5.7 billion market cap company. The market cap of this company from its all-time high about 18 months ago is down way over 90%. The stock price is down way over 90%. So a lot of what I'm about to talk about has been priced in. However, we never know when a bottom is in. So I'm going to talk about their issues first. Okay, there's two main issues with Fubo, in my opinion. So you can see this is from their 10Q for March 31st, 2022. So this is comparing the 3 months ended this year, March 31st, to the 3 months ended in 2021. So you can see their growth was substantial. They more than doubled in that period of time. So revenue is not a factor for them. Okay, so if you look, they have 1.06 million paid subscribers in Q1 of 2022 in North America. So they went over the 1 million subscriber mark, $237 million of revenue, which we just saw. So these were big milestones. They have been growing rapidly. So it's not an issue with growth, whereas total revenue was $242 million. Subscriber-related expenses were $245 million. So just that one line item is more than their entire revenue. The majority of that line item pertains to paying for the content that they have. So what's happening right now is, even though their subscriber number is going way up, this number has to get into balance, because if it costs more money per subscriber than the revenue you're getting per subscriber, that's an equation that does not work. So that was one of my main concerns when I last talked about this. And obviously we have not had a financial statement since then. So what I will be looking for, the second quarter financial statements will be coming out in August. So I'm going to look for two things. The first one is we want to see this relationship change. Subscriber related expenses has to be less than total revenue, or this formula just straight up doesn't work. So we need to see if they made progress along those lines. The number two issue I have with them is this is their net cash used from operating activities was $126 million. That is up from the same period last year. They spent $53 million, almost $54 million. So that is more than double. $126 million of cash in a quarter is too much. What I'll also be looking to see in the next quarterly report is that this got better, and hopefully it should get substantially better. This number will dictate how much of a cash runway they have. If we look at their balance sheet, you'll see they have $450 million. So they do have a lot of cash. But if they're going to be burning $129 million a quarter, then that's not as much as they need. If they can cut that number back to give themselves more like 6 quarters or 8 quarters worth of cash flow instead of 3 or 4 quarters worth of cash flow, that will make a monumental difference, because I do think that if they can fix these two problems, and if they start trending in the right direction, when we look at the charts, I think from a technical standpoint, it looks to me like there's some potential upside to this company. But I did want to point out all these risks, because right now, this is the latest and greatest information. And from this standpoint, none of this has changed. What has changed is the price of their stock. So before I look at that, I want to show you one other thing. Okay, this was a press release put out a couple of weeks ago. Fubo TV to launch Pick'em Games, a first of its kind gaming experience integrating live TV streaming and Fubo Sportsbook. So to me, this is the game changer for Fubo over the course of time. And I do think it's going to take some time to get up and running. So this is not a this quarter or next quarter thing, but you can see they've made progress. I'm going to explain what this is. And ultimately, if they can implement this formula, I believe this is where their revenue will change dramatically. and this will change that equation of subscriber revenue to subscriber cost. Okay, FuboTV will unveil Pick'em games this weekend, becoming the first company to launch the popular free-to-play sports contest directly integrated into the live TV streaming experience. In another first, Pick'em players in selected markets will have seamless access to Fubo Sportsbook by scanning a QR code to place real money wagers aligned with their picks. This marks the latest incorporation of FuboTV and its owned and operated real money wagering platform. So this is the long-term goal, and you can see they're starting this in limited markets. Obviously, I think this is a situation where market by market, they're going to have to gain all the approvals necessary to make this happen. But what they're talking about is literally watching a game and betting on it in real time. That's an interactive wagering with your TV that you're watching. So I do believe if they can reach some kind of critical mass on this, this would definitely be a game changer for them. And it's a big part of their puzzle. Fubo is very heavily sports skewed. So again, this is in the early phases. They just rolled this out a few weeks ago, but I do think this is one of the things that looms out there as a potential big upside for Fubo. So there's a lot of good things about their business model. The real question is, can they control their costs and can they control their cash flow so that they can get where they're going? So when I did a video 2.5 months ago, I was a bit concerned about the share price, and I just want to show you a clip. So I said this. So to go from where it's trading right now today to its all-time low, that's still another 32% down. And there is no guarantee that this line will hold because we walked right through this 1.5-year low and right straight through this 2-year low. So their last line of support is 32% down from here, and I don't know that that will hold. Okay, so I'm going to go to the chart and you're going to see what I was worried about is exactly what happened. So when I made that video, at the end I basically said, I like this company, I like what they're doing. However, I do think there's a lot of downside potential to their stock in the short term and that I was staying away from it. So I'm starting to change my mind about that. Again, I am not yet invested in this, and of course, this is not financial advice. You guys need to do your own due diligence and figure out this is a very, very high risk play. So please do your due diligence and invest carefully. But with that said, let's take a look at the chart. Okay, so I'm going to start zoomed out. You're going to see that back in December of 2020, Fubo traded all the way up to $62.29. They then just a few days ago hit their all-time low at $2.32. So from top to bottom, you can see that's over a 96% decrease in the price of this stock in the last basically year and a half. But let's go from a more recent number. Okay, so if we go from basically November 1st until now, which is about 7 months ago, that is still over a 93% decrease in the price of Fubo's stock. So this has been an absolute total crash. And really, even disregarding this whole period of time, these 6 or 8 months, even just since November, down 93% is basically pricing in a massive risk of going out of business. And I think I just showed you why there are a few very legitimate concerns. Having said that, they do have $450 million of cash left. So it's going to be all about, can they show investors that they can make that $450 million in cash last long enough for a point for these guys to turn the corner and investor confidence to return. And obviously also, we're about 18 months into a bear market type of a situation for these small cap high growth stocks. Most of these stocks peaked in January or February of 2021. So we are about a year and a half later. So at some point, this risk off, 100% risk off environment will change. We're starting to see over the last few days a little bit of a change. We don't know if that's just a 1 or 2 day thing or if this is a shift in the market, but at some point, money most likely will filter back into some of these higher risk plays. Even if that takes another 6 or 8 months, then that will be about a 2-year period where the money was out of this. So that's one of the pieces I'm anticipating. So obviously I don't know if that's going to happen or not. Rotation is normal, so this has been rotated out of for quite some time. So I am expecting some rotation back in at some point for the companies that are worth investing in. That does not mean that straight across the board, all these companies are going to go back up. The bad companies that are down 90 to 95%, unfortunately, probably are not going to recover from that. However, if Fubo can prove their worthiness in that period of time, then I think there is a lot of potential upside. So I'm just going to zoom in a little bit closer. This is Fubo on the 1-day time frame. You can see here just a few days ago on July 5th, so that was just 2 days ago, Fubo hit its all-time low at $2.32. And a few days before that, it hit $2.34. So you see here on July 5th, Fubo hit its all-time low of $2.32. So just a few days before that, it reached $2.34. So I do feel like this has found some type of bottom. This green line is basically where FUBO was when I did my last video about 2.5 months ago. That was on April 22nd. So from the time I made that video until the bottom just 2 days ago, FUBO was down about 49%, so very nearly a 50% crash, even just in that short period of time. So that was my concern, and I think that that has played out. So I'm looking at a potential that FUBO has formed a little bit of a bottom here and may be due for some recovery. So again, this is a super high risk play because I've given you the reasons why this stock is down. It's not just randomly down 93%. However, if they can find a little bit of their footing here and have a little bit of a run up, even maybe just back to where they were, May 31st, which was just about 1 month and 1 week ago, that would be about 35% upside to FUBO in the short term if they were able to have that rally, again, to where they just were. If they could get back to where they were when I made my last video just a little over 2 months ago, that would be about a 68% increase in the price of their stock. So obviously there's a lot of variables. These are a couple of price targets I'm looking at, and FUBO was trading drastically higher than this. From a buy and hold standpoint, there's the potential for this thing to 2x or 3x or 4x or 5x. But having said that, I believe there's an equally weighted risk that this goes to 0. So this is a super high risk investment. However, since I last talked about it, it has gone down almost 50%, and I do feel like it's found a little bit of its footing here. So again, not financial advice. Please be careful with this one. I have not yet decided to jump into this, but I am looking at it. And again, I think the biggest short-term catalyst is going to come in the first couple of weeks of August when they release their financial statements and we see how they did from a cash flow standpoint. So that's my update on FUBO. Thanks so much for watching. If you made it this far, please remember to subscribe to the channel and hit the notification bell and smash the like button. So thanks again, and we'll see you in the next video.